So there are these risks kind of appearing in 2025 that kind of started to appear at the end of 2024. But broadly, we think it's a fairly benign outlook still for the global economy, and the US economy still seems strong.
Hello, you're watching Proactive. I'm joined by Han ETF Head of Research, Tom Bailey. Tom, very happy New Year to you. So, what's the outlook for markets in general for 2025?
Sure. So, I mean, global conditions kind of broadly still seem benign. Seeing healthy economic activity levels from particularly a strong US economy. Inflation somewhat moderating, and this expectation of gradually easing monetary policy. But there is kind of a reappearance of some risk, particularly around inflation. So, governments around the world have stimulated economic activity at the expense of their fiscal positions. We're starting to see worries about the persistence of inflation, both in the US and in the UK, and this has had a knock-on effect on terms of on bond yields. So there are these risks kind of appearing in 2025 that kind of started to appear at the end of 2024. But broadly, we think it's a fairly benign outlook still for the global economy, and the US economy still seems strong. But also you have other kind of risks on the horizon investors need to be aware of. You have, Trump's re-election. There's kind of positives to this in terms of potential tax cuts and deregulation, which may stimulate obviously the economy and prove positive for markets. But at the same time, there's that kind of overhanging risk, which everyone's aware of in terms of trade disruptions around this talk of tariffs and other senses of a kind of this geopolitical risk on the horizon.
One thing we've heard a lot of from Han ETF is copper. What's the outlook for copper, Tom?
Sure. So, we see copper as entering 2025 as still with this kind of widening supply-demand deficit. We see structural kind of demand drivers for copper alongside limited new mine supply. So we think that's very positive for the price of copper. I think crucially, obviously we're getting some data later this month on China's economy, and obviously historically China and China's economic performance and the price of copper has been very much intertwined. But we think copper's demand is becoming less reliant on traditional sectors like the Chinese property market. We think if you look at in 2024, copper demand diverged from its kind of historical broader kind of commodities it's tied to, like iron ore. And we think it's because of kind of new demand drivers for copper. So whatever happens in China, how its economy is doing in terms of the stimulus efforts, we think is potentially still positive for copper. And that's because of these new demand drivers we're seeing. Governments around the world, China included, are spending large amounts on very copper-intensive infrastructure. This is grid upgrades for the net zero energy transition, as well as renewable energy itself, electric vehicles, which take a large amount of copper compared to conventional cars. So we see this as a kind of new structural demand driver for copper. So copper is kind of less intertwined with that outlook for the global economy itself, although it's important, and more on this structural shift towards a more electricity-intensive global economy away from fossil fuels. And at the same time, we're seeing, the AI and data center stories obviously talked about a lot, in terms of often some of the big tech companies and semiconductor chips, etc., as kind of part of that story. But we also keep in mind that this AI and data center story is heavily dependent on copper for the infrastructure, and we think this also represents a kind of new and significant demand driver for copper, because obviously the energy intensity of AI and data centers requires grid upgrades and expansions, which ultimately rely on copper.
Uranium has also been a popular theme, but was disappointing in 2024. What's the outlook for 2025?
Yeah, you're right to say it was a disappointing 2024 for uranium, for anyone invested in either uranium itself or the miners. And what we saw in 2023 was uranium spot price kind of going up roughly 90% in 2023. And then in 2024, we started the year on a very high note with the price of uranium above $100 a pound. But from there, it slipped throughout the year down to 80, 70, we're around $70 a pound right now. So that's proved a bit of a disappointment. But we do think that the kind of structural story for uranium is still in place, and we think 2025 could be a positive year for the commodity. We would still kind of view uranium as in a bull market. The kind of disappointing performance in 2024 is just kind of a blip rather than, say, the end of the uranium bull market, which has been going on for the last few years. We think there's still strong fundamentals for the uranium market. And similar with copper, that's driven by accelerating demand and supply constraints within this context of a high energy demand with the requirements of net zero. So, we're seeing surging energy demand by the proliferation of AI, as well as the reshoring of manufacturing, in places like the United States. And then at the same time, in terms of urbanization and industrialization in the emerging economy world. But obviously, these energy demands are in the context of net zero. We have a kind of issue on how you kind of create that reliable baseload power. And nuclear energy is increasingly recognized as a way to address these demands. It provides reliable, clean, and safe energy. And that's been recognized both by governments. So we've seen governments continue to pledge to reopen and expand their nuclear energy fleets. And at the same time, we're seeing big tech companies kind of get interested in nuclear energy as a way to meet their energy demands in this kind of AI data center world. Notably, we saw last year, Microsoft's 20-year power purchase agreement to support the famous 3 Mile Island nuclear power plant in the United States. And then at the same time, on the kind of US policy aspects, as we're coming up to Trump's inauguration, the Biden administration was pretty positive for the nuclear industry itself. Legislation like the Inflation Reduction Act, as well as kind of driving the energy demand and the CHIPS Act in terms of this reshoring theme. If you look at the Inflation Reduction Act, it had some incentives for the nuclear industry itself in there, and broadly the administration was positive. We wouldn't expect the Trump administration to kind of reverse that broadly positive sentiment around nuclear energy, given that kind of historically it's the Republican administrations that have been much more pro-nuclear than Democrats. So we think there's a bipartisan consensus in America that nuclear energy is going to be a key part of America's energy mix going forward. And it doesn't cause the same kind of divisiveness that, say, some of the renewable energy efforts for decarbonization have within the United States. So it's a kind of very bipartisan support, we think, in the US. And obviously that's the demand side for uranium. The supply side, the story is still there. There's demand supply imbalance. So uranium mines are restarting, and so some of these uranium miners should benefit from historically higher prices. Obviously, I mentioned the price of uranium is down to $70 a pound, whereas at the beginning of last year, it was above 100. But this is still a relatively high price compared to the last few years. It is profitable for some of these miners to kind of reopen their sites and start producing again. So we do expect some of those miners to benefit from this, but at the same time, we don't think this is going to obviously be a story where the higher demand signal leads to high supply and the price rebalances out. We think the production capacity still remains insignificant. It remains below the ability to meet that supply demand gap. So with no major new production expected in probably the next 3 to 5 years of uranium on any notable scale, we think this imbalance is going to persist, and that's why we remain very positive on the uranium story.
Well, a lot to watch out for in the year ahead. Tom, thank you very much for your insights as always.
Thank you.
That's Tom Bailey, Head of Research at Han ETF.